Greetings and welcome to India Business Insights. Today we have a very special guest with us who will help us in a deeper understanding of tax benefits to startups. India Business Insights is pleased to welcome our guest for today, Mr. Pushpendra Surana. Mr. Pushpendra is a leading chartered accountant and a partner of the GAMS and Associates. He's also a CPA from Australia and an insolvency expert. He has a deep expertise in direct and indirect taxes. Before we move ahead with the interview, we'd like to play a short video on detailing the tax benefits available to the startups that we prepared under his guidance.
Tax benefits to startups. The benefits and exemptions are available to the startups only if they come under the criteria of an eligible startup. What is an eligible startup? Has not yet completed a period of 10 years from the date of incorporation or registration, is a private limited company or registered as a partnership firm or a limited liability partnership. Has an annual turnover not exceeding Rs 100 crores for any of the financial years since its incorporation or registration, is working towards innovation, development, or improvement of products or processes or services, or if it is a scalable business model with high potential of employment generation or wealth creation. It is not formed by splitting up or reconstructing a business already in existence. 3-year tax holiday in a block of 10 years. The startup incorporated between April 1, 2016 till 31 March 2021 were eligible for this scheme. Budget 2021 extended the eligibility to 31 March 2022. The Finance Minister, via Budget 2022, extended the eligibility to March 31, 2023, which is an additional year for the startups. Such startups will be eligible for getting 100% tax rebate on profit for a period of 3 years in a block of 10 years, provided that annual turnover does not exceed Rs 25 crores in any financial year. However, only companies that are registered with the Department of Industrial Policy and Promotion are eligible to claim this benefit. Moreover, the startup must be a company that works in the field of intellectual property and pushes innovation and development of services and products related to the same. The only tax the startups must pay is minimum alternate tax, which is calculated on the revenue reflected on the book profit of the company. All eligible startups who intend to claim the benefits of such tax incentives would be required to maintain separate books of accounts for eligible business, get their accounts audited by a chartered accountant, furnish audit report in Form 10 CCB along with income tax return. Tax exemption on angel investments above the fair market value. The government has exempted the tax being levied on investments above the fair market value in eligible startups. Such investments include investments made by resident angel investors, family or funds which are not registered as venture capital funds. Also, the investments made by incubators above fair market value are exempted. Upon filling the requisite declaration with DPIIT and subject to certain conditions, eligible startups are exempted from angel tax. Set off of carrying forward losses and capital gains allowed in case of a change in shareholding pattern. The carry forward of losses in respect of eligible startups is allowed if all the shareholders of such company who held shares carrying voting power on the last day of the year in which the loss was incurred continue to hold shares on the last day of the previous year in which such losses is carried forward. The restriction of holding of 51% of voting rights to be remaining unchanged under Section 79 has been relaxed in case of eligible startups. Presumptive tax benefits. A company including a startup that has a turnover of under Indian rupees 2 crore is eligible to enjoy the benefits of the presumptive tax scheme. Income is 50% of the value of services provided, that is applicable for professionals. Income is 8% or 6% of the total value of goods sold, that is applicable for businesses. Under this, the company is not required to maintain any book of account, which relieves the pressure on entrepreneurs. It leaves more funds in their account to innovate and develop newer ideas. The scheme of presumptive taxation is only applicable to individual proprietors, Hindu undivided families, and partnership firms, but not applicable to companies.
Thank you so much for joining us, sir, despite your busy schedule. And we hope that whatever questions that we have, our audience will find it very useful in order to solve their queries with whatever tax benefits and startups that they have. Thank you so much for joining us.
Thank you. Thank you for calling me for the interview.
Thank you, sir. So the first question that we have is the tax benefits that we did talk about. So will that be valid for the new startups as well? The startups that are going to start now, that the people, they will begin now. So will it be valid for those startups as well?
Yeah, correct. Yes. There is no restriction as such. The benefits, all the income tax benefits which are available to the existing startups are all available to the new startups.
All right. So beside that, if there was a startup that was already established, however, they were not registered earlier. So now if they go ahead with the registration, will they be able to avail these benefits of the startup?
See, for the registration purposes, there is a cell from the Government of India wherein you have to register initially. Post that, post the registration, the eligibility automatically is available to all the startups.
All right, sir. Besides that, have there been any representations in order to extend the scheme, for any other startups? Like there are certain criteria that the startups have to fulfill. So have there been any representations so that we could extend these benefits of startup to other startups as well?
Government of India keeps on receiving many of the representation from many entities, majorly from the MSME ministry and the MSME bodies, wherein generally they represent all the medium scale enterprises. So startups per se, they have been doing good good communication with the government, and government is also very much open for all the benefits that can be provided to the startup, because the Government of India is very much keen on the entrepreneurship development program. So in that, Government of India has been doing all the rounds. There have been a lot of startups which have come off of late, and India is now one of the leading hubs for startups.
Besides that, so how would you guide a new startup? How would you guide a company which has made a small profit until now, and they still have, like, for example, 3 or 5 years under that bracket? So how could they use much time frame to get the benefits of these tax benefits?
See, under the Income Tax Act, there is a 3-year tax holiday period in the span of 10 years. So for any startup who has started earning profits, it is good. They have earned the profit in the 3rd year. So when they reach the 3rd year, they will actually know where do they stand and how much profit they can actually earn. But if any of the startup is actually having the mindset that yes, now what we are actually earning is it's going to be almost same every year, so they can choose any of the 3-year period. But the maximum benefit to be availed, the best period is when you have the maximum profits.
And the last question that we have for you is there anything that you would wish to advise to the new startups regarding this tax planning?
Tax planning, it's always good when you have a good system in place. So if you have a good system, good accounting system, good internal good SOPs and the internal controls. So with that, you have a transparent accounting system and transparent profitability. So with that, you can actually get a good value for your investors. And tax planning per se, since the taxation is very it's actually at the one of the lowest level across the world, and for any of the startups, there is a section under which if they apply, they can get the benefit of 22% as the tax rate instead of straight 25%. So they by applying for that, they can save that 3% on taxes.
It's really important to understand that how the new startups, they should understand these tax benefits and make use of that. So I hope this becomes a very insightful video for our viewers as well. Thank you so much, sir, for joining us. Thank you so much for your insight.
Thank you so much, and all the best.
Thank you so much, sir. We thank you from India Business Insights. Thank you so much.